Hello active traders, and welcome to our TradeMastery.com YouTube channel designed to help you make bigger winning trades more often. In this week's episode, you're going to be learning new strategies for how to swing trade small cap stocks under $10. When it comes to swing trading small cap under $10 stocks, one of the most important overlooked strategies, strategy number one that we're going to look at, is using volume to confirm an entry. And by that I mean increasing volume. So you've got convergence, increasing price action along with increasing volume. And the reason this is important, thinking back to all my own winning trades and the stop losses I've taken, is if you've got increasing price but volume is going down, you've got a divergent pattern, and it's less likely to hold and take out new highs. Increasing volume, a lot like, say, playing saxophone with an increasing volume like right now. Tip number two, and one of the more important overlooked strategies for swing trading small cap under $10 stocks correctly, is trend strength. You want charts that have a nice 45-degree angle breakout that continuously run up. And that's what you'll be learning about in my swing trading small cap service that I've got launching soon. But what you want to look for, when you're especially valuable when you're trading the cheaper stocks, is avoid the pop and drop, uncertain cycling charts that go up and down and cause expensive stop losses. It's especially important. It's important in all kinds of trading, but especially important when you're trading cheap stocks to make sure they have a pre-existing uptrend of at least a week or so that's getting new buyers day after day, week after week before you put on the swing trade. That makes a big difference, at least I found in my own trades, to look at pre-existing trend strength as a key criteria before putting on the trade. You can think of trend strength much like notes in a scale, or playing from low notes to higher notes. How consistent is it? You don't want up and down all over the place notes. Just like playing saxophone a little bit like this, you want kind of like the notes in a scale, going from, say, low C up to high C, step by step in a stairwise progression. Same thing in your trades. You want stair-step progression, uptrending charts in your swing trades. Like this on the horn. A third key point that a lot of traders overlook and cause for less than optimum profits, or more frustratingly, a lot of stop losses. I remember back on my own stops, it was almost universally with charts that didn't have wide enough trading ranges. So when it comes to trading charts under $10 a share, make sure they have at least a 1-point range on the 15-day chart, but also look for those that have better ranges than that. And by that I don't mean pop and drop stocks, that like penny stocks that run up and then collapse right back down again. That's just going to get you in trouble. What I like are charts that have reasonably wide ranges to go along with the directional trend strength. Kind of like playing a wide range like this if you're playing a little bit of jazz saxophone. You want the range, not just playing the same notes in the middle, but a little bit of range to make sure you've got a good, strong, powerful sound. And our fifth tip is to trade wide, not deep, meaning trade more instruments, 2, 3, 4, or 5 at a time, instead of just try to cherry pick one and bet 1,000 shares or 2,000 shares and hope for the best. You could try that. I used to do that, but I found a much more consistent approach is if you play a basket or a handful of instruments, much like a cluster of notes that you're playing. You wouldn't just play one note if you're playing saxophone, right? That would go like this. Not too exciting. You want to play some variety, like this. And when it comes to swing trading the cheaper under $10 stocks, I like to trade a basket. Again, not 20 or 30 different instruments. That gets to be too unwieldy, I know from experience. But if you do trade the cheaper stocks, any stocks for that matter, it's always smarter to trade a handful of them, 5 or 6 different instruments simultaneously, so that you can make the most of the ones that run, take small stops or break-even trades on the ones that don't move much, and make for a successful trade approach. So anyway, that wraps us up for this week's episode of our TradeMastery.com YouTube channel video. I hope that it gives you some useful and fun insights. Be sure to give it a thumbs up. I'd certainly appreciate it if you would subscribe if you're not already subscribed, so that you can get these videos updated regularly. And until next time, trade with real small stops, trade smart, and try and make as much money as you can. So let's go get them, and best wishes for trading success. Goodbye.